Hello everyone, this is Bob Bruce from Integrity Wealth Consulting with your March 2016 economic update. Now in this video, we're going to talk about some of the economic headlines that have influenced the markets over the last month, and we're going to give you some insight into what they could mean for you. Now please stay tuned at the end of the video for our required disclosure statement. Well, January is pretty rocky for stocks, and February didn't do much better for investors as far as offering some relief from that volatility. It's still the name of the game. However, we did get some positive news. Let's take a look at some of the major headlines. If you've been watching the news at all, you know that some people are fearful that we could possibly have a recession coming our way. Some economists are worried about that possible U.S. recession because of issues like low oil and commodity prices, emerging market problems such as China, and fears that the central banks are simply out of the tools to fight an economic problem. Now, these fears are not totally baseless. However, they don't necessarily spell a possible recession. There are also a lot of positives to consider, and one of those happens to be the job market. The January jobs report showed the economy gained 151,000 jobs for that month. The gains pushed the headline unemployment rate down 4.9%, and that is the lowest it's been since February of 2008. Another positive is that wages are growing and Americans are continuing to spend money. That's always good for the economy. In short, we really don't know if a recession will happen. Nobody really does. However, we're going to keep a close eye on everything and make sure that we update you on any new further developments. Plummeting crude oil prices have had a lot to do with some of the negative sentiment in the markets. Crude oil prices are so low because the world is simply awash in oil. Combined with the slow demand from China, that's going to push down prices. And investors are kind of worried that those low prices mean the global economic growth situation is going to get worse. Low prices also cut into energy company profits as well as those of companies with stakes in the energy industry. With 87% of the S&P 500 companies reporting in, we see that overall S&P 500 earnings were down 3.6% in the fourth quarter of 2015. However, if you remove the energy sector from that analysis, earnings actually grew a healthy 2.5%. Firms that mostly depend on U.S. demand did even better. The overall economic picture wasn't as bad as expected last quarter. The second estimate of the quarter four economic growth showed that the gross domestic product grew about 1%, not the 0.7% originally estimated, so they pushed it up a little bit. While economic growth decelerated in the last 3 months of the year, it didn't slow down as much as economists had thought. Responding to concerns about economic growth, the Federal Reserve declined to raise interest rates again in its January meeting, keeping them low to boost investor confidence, while the Open Market Committee will meet again in March. Most economists don't think that the Fed will hike rates until possibly June at the earliest. The bottom line is that 2016 has been a bit rocky for investors, and the volatility is likely to continue for a while. Corrections and the uncertainty aren't easy to cope with, but let's remember that this is all coming after many years of solid economic growth. We are keeping a close eye on the fundamentals and helping our clients make informed decisions based on the very latest research and environment. Once again, this is Bob Bruce with Integrity Wealth Consulting, and that's our update for March 2016. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, you can simply call us at 724-940-9060. We'd be happy to talk to you. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision.